I'm just going to give a super quick rundown and then we're going to get into some live chart examples. So this is the framework of accumulation, manipulation, distribution. This is entirely about price. So it's the idea that price will accumulate orders. In this scenario, it's buy orders or buy stops at these highs. We manipulate lower, run out the sell stops, hit a key level like a 1 hour fair value gap, and then we distribute higher up to this, obviously the liquidity, and then any further targets that we may have. All right, let's go into some examples. So this is bullish example number 1. You can see here, right, it is the same exact framework that I just had shown. We have a higher draw or some highs above it. We have an accumulation. We manipulate and distribute. But what are the key aspects that I want y'all to take from this? Well, starting with the accumulation, what does the liquidity look like? Ask yourself this all the time. What does it look like? Notice here, this is just choppy sideways movement, and these are 4-hour candles. So this is 12 hours of basically nothing. But the main thing I want you to see is the wicks. How are we printing the wicks? Look at the bottom in the manipulation. Look at these aggressive wicks. Look at the wicks here that led to this move. Notice how they're large, aggressive, they sweep. They're manipulation, right? Versus here, it's soft, smooth, nothing aggressive. Even this move up into this gap right here, it's not even that aggressive of a wick. So that's what you want to be looking for. Smooth highs, smooth lows, slow price action, kind of chop sideways movement. So accumulation is fairly easy. I'd say that's the easiest part. Manipulation is where people get caught up the most, and it's where I want you guys to focus the most. So there's 3 things I want you guys to look for, and 3 things at all times. Like, these are incredibly significant. So high time frame key level and significant liquidity sweeps are bare minimum. Bare minimum. You need these to justify anything. If you have one of these, it doesn't count. If you have half, it doesn't count. You need both. I know half is 1, but I'm talking about 0.5 anyway. So you need a significant liquidity sweep and high time frame key level. Well, you can see this 4-hour gap right here, unmitigated gap, and then that's our key level. Pretty easy with that. If you're confused about fair value gaps, I do have a video over that. I think it's like 7 minutes, and I cover literally everything. So check that out if you're confused on fair value gaps. I think it's a good watch. And then significant liquidity sweep. What do I mean by significant? Well, this kind of covered, like, I didn't want to say high time frame sweep because it's not always just a high time frame sweep. What I mean by significant liquidity sweep is session highs, session lows, previous day liquidity, weekly liquidity, or previous manipulations. Notice how this manipulation here led to this distribution. There's a ton of significant liquidity here. Why? Well, we built up liquidity at these lows throughout this entire range. People are like going long on a higher time frame. They're taking swings in this area and putting their stop loss at this low. So even if you buy here, their stop loss might not even be here. The majority of them will be at the major lows, the significant lows with the significant liquidity. So beat that into your skull. You need a significant liquidity sweep because for the market to move, for the market to manipulate, we have to hit an imbalance and sweep out liquidity, so there's no reason to go lower. If the market draws to imbalances in liquidity, your high resistance, your manipulation should be taking out both of those. So we don't have anywhere to go. There's nowhere to go beyond these lows. The gap is mitigated. Not entirely, but it's tapped into, therefore mitigated. And we swept liquidity. There's nothing else for the market to go to. So this is perfect manipulation. This is where I want you guys to focus on most. And then distribution is fairly simple. All I really look for in distribution to like kind of confirm that my manipulation is, what I think it is. Like at this moment, I wouldn't be entirely certain, or well, I'd say here. Right? I wouldn't be entirely certain because, well, we've only manipulated and printed a bullish candle. So how do I know if my distribution is correct? What you should see in this distribution is starting to disrespect bearish and respect bullish. Now, obviously, this is a bullish scenario. Like, it would be with your aligning bias, of course, or the aligning, like, bias of that framework, of course. So all you're really looking for after this manipulation is a change in order flow. You can use other confirmations for this, like CISD, inversions, creating new gaps, whatever it is that clicks for you. That's fine. What I like most is disrespecting versus respecting. So what does that look like? I would just mark out this bearish gap, mark out this bullish gap. That's 2 conditions. This one confirms that my manipulation is wrong. And if this one is respected, it confirms that my manipulation is correct. And then obviously you see this following candle does what? Well, closes through this gap, closes through this gap. So I'm going to have more confidence in us being bullish. And then you can see, like, I think we have like some like run lower, still respecting bullish again, confirming the fact that we are in this distribution phase, respecting the aligning bias, disrespecting the opposing bias. And then obviously we continue higher. I'll go more into this in our next example. It's going to be a bearish one. So this is going to be our bearish example. And again, it's going to be the same things. Look at the lows throughout this entire accumulation. They're all smooth, nothing, anything crazy aggressive. I know this one is like an aggressive low, but then you add context. It's like, okay, it's a swing, or it's a failure swing on equal lows. That's also a failure swing. So definitely not anything to like be aware of here. Like, don't pattern trade the smooth highs and smooth lows. Add context to your trading. So then you notice, all right, well, if our criteria is a significant liquidity sweep key level, right, and then SMT is optional, of course, like that's, you'd want an SMT. It makes the setup better, but it's not required. But preferably I want an SMT, like with every trade I take. But you can see we sweep previous day high in like this entire accumulation. So there's a massive amount of liquidity being taken out of the market. So it's significant. And then you add that high time frame key level. I know this doesn't look clean on the 30-minute, but this is a 1 hour gap. Sweep into that gap, hit it, right? There's nothing above here. If there's no liquidity to be taken and there's no imbalance to rebalance, there's no reason to go higher. Therefore, high resistance, therefore manipulation has occurred. And then, of course, it gets confirmed by that distribution. Now, we don't have as good of an example as last time, like for the distribution phase, but the targets are phenomenal, right? So we don't have like the, like the distribution like this where like we retrace into the gap, and I can explain it like that. But we do have extremely good targets here for this distribution. All of this is LR. There's not a single bit of high resistance. So if our high resistance is a sweep into a gap, none of these lows have done it. And you might say, okay, this gap, but this got inversed. So all of this is low resistance. And then on top of that, it's a failure swing on a failure swing to equal lows and open imbalances. So if the market draws to what? Liquidity and imbalances, and below us is open imbalances, low resistance liquidity that's stacked up since the 6th of January to the 7th. So over a day of accumulating orders. And then all these open imbalances, and then you can add all this stuff down here, add more of that context to the distribution. This is an A+ AMD example. We have so much of a reason to go lower and so little of a reason to go higher, simply based off of two small things: key level and significant liquidity sweep. That's all it is. If there's no reason to go higher, there's all the reason to go lower. And obviously, put context to it. So that's kind of the main thing. There's nothing anything crazy with AMD. I'll go over one more example, but I'll do a little yap. AMD isn't anything that should be difficult. It is very, very simple. It's 3 steps. You understand the accumulation, which is always, and it should always be, low resistance or just like regular highs and lows. You do not want your accumulation to have high resistance liquidity within it, because that's no longer an accumulation, that is manipulation. And then manipulation, obviously, have that high time frame key level. Preferably, it'll be unmitigated. Like you can see this one. I don't believe previous day, it might have, but most of this gap has yet to be tapped into. So it's a significant key level, and then on top of that, it's a high time frame one. So it pairs really well. And then you take into account, obviously, like we swept out all of this liquidity. All of these people going short here got ran through because we took the high. So and then obviously you apply that to the bottom, right? If this is something good for our manipulation, this is also going to be good for our distribution. You can look lower. What do we have? A high time frame key level that's unmitigated. This is an imbalance that has yet to be rebalanced. That's what the market draws towards. And then you add significant liquidity. Okay, equal lows that then get left, and then the swing gets left with another swing. Like, we're stacking liquidity here. People are seeing this and it's like, oh, we're bullish, we're rejecting the lows, but they're misinformed. They don't know. And then obviously, like, I can stretch and like say, like, yeah, like we have previous accumulations down here, but like I'm not gonna, pull my ass out. So very good bearish example here. Let's get into the next one. That's gonna be the final one. So here we have our final example. Again, it's the same thing. What does our accumulation look like? Well, these highs that we're leaving over here are smooth. It's sideways movement that doesn't really do much. And on top of that, we're leaving failure swings. Remember last time how I was talking about we're stacking liquidity, liquidity. Well, it's the same thing here. Liquidity here, we make another failure swing, or we make a failure swing, and then we make another. This is stacked liquidity, and then on top of that, it's smooth highs, so it like goes hand in hand. It's like bread and butter. So very good accumulation here. And then obviously, what does our manipulation look like? Actually, I shouldn't have deleted that. Our manipulation runs into a daily fair value gap, so that high time frame key level, and then we sweep what? Well, not only did we sweep out all of this accumulation here, we swept out previous day low. So that's what the liquidity aspect is there, right? We've swept out liquidity, we've hit an imbalance. I sound like a broken record. I know it's probably fucking annoying, but I'm beating it into your skull for a reason. There is no reason to go lower. We filled up the daily gap. And now the daily gap was like all the way throughout here, but like this is the bottom of it, so I wasn't going to mark that the whole thing. But we fully mitigated an imbalance. So there's no imbalance to target lower, and there's no liquidity to target lower. We can't even mitigate this gap further. It doesn't go lower. It's filled. There's no imbalance. There's zero logic in going lower because there's a lack of liquidity and there's a lack of imbalances to rebalance. But if you then look at the other side of the market, so if we can't go down, what can we go up to? Distribute, right? Well, if you look to the buy side, we have an imbalance right here. So unmitigated 1 hour gap right here. Oops. And then we have more liquidity here, here, and here. So we have an imbalance that needs to be rebalanced and open liquidity to be swept. Shocking, isn't it? Right? It can truly be this simple. I'm fucking blowing your brain open, I know. So it's super, super simple. You really only need a few things. It's really mainly about the manipulation and the accumulation. The distribution is just going to happen. If you have A plus accumulation and A plus manipulation, you can expect distribution. It's distribution is the easy part. This comes last. This is just what happens. Then you find your entry using the model. I also have an inversion model up as well. If you want to watch that, pairs really well with AMD. Like you can even take like a setup like this, accumulate, manipulate, then you get your inversion like here, and then go higher. So then you can also take an AMD entry at that. So yeah, I would check out that video. But yeah, this is AMD. I really wanted this to be simple. I don't want to confuse y'all. This is the bare bones, right? So accumulation. What do I want to see in my accumulation? Or actually, I'll just do it A. You want to see smooth highs. I'll go ahead and do it like this. Smooth highs, failure swings, built up liquidity. That's what you want to see. Notice how here we're going sideways. We're just building up orders. Because what is an accumulation? It's accumulating what? Orders. So going sideways is accumulating orders because no one's manipulated out yet. And then obviously failure swings right here, here, here. And then this isn't really a failure swing. And then of course smooth highs. That kind of confirms that it is accumulation because again, you look at the low. If I delete this, you can kind of see it. This wick is aggressive, like somewhat. Like it runs lower into an imbalance and sweeps liquidity and instantly rejects. Like this candle went a little bit lower, and this is a 9 a.m. candle as well, so time aspect, but we're not going over time. We run lower and then we close way, way higher. So that's not happening over here, and it's happening in the manipulation. So manipulation, this is again very easy. You want a high time frame key level. You want a significant liquidity sweep. And then you want that SMT, which is like your cherry on top. It's optional, but I really do recommend, like, if you want the best results in trading, take the SMT, because why would you settle for less? Do not be a bare minimum trader. Do not be a bare minimum trader. And then distribution. Distribution is fairly easy. You just want to look for, like, to confirm distribution, look for aligning bias PDA to be respected. That's all you really want. I'll go and wrap that. That's all you want for your distribution. That's how you confirm it. It's whenever we have a flip in order flow. You can see this change in the state of delivery flips order flow, and then this inversion as well kind of confirms that. So you're really just looking with distribution that we start trading and aligning bias of your manipulation. That's really it. But yeah, hope y'all enjoyed. If you want more education from me or just more content in general, I highly recommend you join the Discord. I'm going to be live trading in there, live reviewing, doing daily recaps, all that stuff. I really want to make a super go-to community and actually start getting y'all some payouts and like profits, you know, and get some testimonials, you feel me? So make sure you join up on that, and hope y'all enjoyed. I'll catch y'all in the next one.